Hey, good morning, everybody. How are you? This is Rick with Hit and Run Candlesticks. Today is Wednesday, June 14, 2023. And I just want to say super great big good morning to everybody. And I'll be back in just a second to say good morning as well. In the meantime, if you would subscribe to our YouTube channel and click that bell after you subscribe. And what'll happen is you'll be alerted when we put new videos out there. Now, the reason I'm saying this is I'm preparing to put some new videos out there about the T-line. Most of you have heard of the T-line. It's known throughout the world as a fantastic trading tool. And you have it on your trading program if you didn't know that. Also, I'm going to put out a video on our Trendicator that we use, and this is this red dots and green dots that you see up here on the chart. Videos on the 3/8 trap, videos on the rounded bottom breakout, my 1750 trap, breakout trades, all-time new high trades, heading for that breakout. A lot of good stuff coming that I'm going to put out on YouTube. So please subscribe and then click that bell so you are alerted. Now, real quick, yesterday we took some profits. Let's see here. Yesterday, right here. Well, we'll just do it this way. There we go. We took some half the profits on our PFE for 27%. We closed Toast for 24%. And we ended up closing all of Intel. The first piece of it was 38.9. The second piece was 52.6%. We've still got trades in the basket that are making money. Remember, if you're a member or a trial member listening to this message right now, make sure you have that app, because we did alert when we bought these. And if you're in the trading room, I'll certainly explain why we bought them and we'll talk about them, okay? In the meantime, hang tight, give me about 2 seconds, and let's take a look at this market, okay? Thanks, everybody. Hey, everybody, how are you? Good morning again. Carla, Winslow, Thomas, Nancy, Maureen, Julie, John, Joe. Good morning, good morning, good morning, everybody. Happy Wednesday, June 14, 2023. Today is Fed Day, so everybody probably knows that. I can't imagine that there's a trader in the world that doesn't know that. I guess we learned some new information about 2 p.m. Eastern today. Whether or not we're going to get a rate hike or not. And you know what I think the best thing is that we're going to learn is we're going to learn what the market thinks of that, and that's what's most important. We can beat up on the Feds, we can cuss the Feds, we can gripe about higher rates, we can gripe about this and gripe about that. But the truth is, everything is in the charts, so that's what we should be watching. The charts will tell us what to do, whether to be long or whether to be short or whether to sit on our fanny for a little bit. And I, for one, will be taking it kind of easy going into the Fed minutes, the release of it and everything. I've gotten a lot of questions here. I was checking the YouTube channel and there was a couple of people asking there. I've had some PMs yesterday. We talked about it in the room. I've had a couple emails about it, about hedging, because we did touch on that yesterday a little bit, and buying some VIX calls. And there's nothing wrong with that if that's something you want to do. Me, myself, and I don't particularly do that. I focus on trading the chart and whether it's up or down, trading whatever stock I'm looking at. Is it up or down? There's a lot of people that hedge, and if you do that, that's great. But if I'm in a position, I believe in that position. No audio. Oh, there we go. Thanks for sharing that, Jack. Appreciate it. No audio. I was talking about hedging, and that hedging is perfectly fine for those that want to do that. I find no use for it, but it's the way I trade, okay? I'm not against hedging. It's just not me. It's just not what I do. For instance, somebody asked me yesterday, why don't I use MACD? Because I don't. Because I prefer to use the trend in the chart, and the trend has all the answers. So I'm all about making trading a little bit more simple. And if you've got positions on, hedging to me is adding more complication. What I have found, if you're an ace trader, then that's probably a good thing for you if that's what you want to do. If you're a struggling trader, you're not making any money, or if you're a new trader, I just don't see the value in hedging. If you've got bullish green positions on and you're worried about all the Fed chatter coming up at 2 p.m. today, why don't you close those positions and take that money? That just seems like the most easiest, most logical thing to do. If you've got some losing trades that are below your stop, well, hedging's not going to help you. You shouldn't be in those because they're below your stop. So, keep trading simple. I really think that's the best thing to do. Anyway, sorry, I really got kind of off track here. The SPY is still bullish. Do we really need to go through through everything? We're going to look at the SPY. We're going to look at IWM and call it quits as far as indices go. The SPY is bullish. Take a look at IWM. It's bullish. Everything in the world is bullish out there right now. Yes, before somebody types it, yes, the Feds could crush that. Absolutely, they could. But again, if you're afraid of that, be in cash. Here's a chart here, LUMN. If you take a look at this chart, you might be saying, boy, I wish I was in this chart yesterday. This, to me, is the perfect chart to put on your watch list. The absolute perfect chart. Now what we're going to do is use our tools and wait for our best entry. I'm going to wait for my best entry. Jack, JW, Carla, Winslow, Thomas, Nancy, Maureen, Julie. You guys all can wait for your best entry, whatever that best entry is. And there is no perfect entry. I guess if there was a perfect entry, it would be the very tippy-toe low down here. Maybe that's the perfect entry. And we can always find those with hindsight. But without hindsight, let's go forward. And how are we going to trade this? Well, a simple thing to do would maybe, let's start by finding the 50% mark on this, from this low up to this high. So 50% is right here about 209. And now what I might want to do is say, take this high, come down to that 50% mark, and we'll do it like that. Now I want to look for a pullback or something resting over the next couple of days on down in here. So it could look something like this. So here we pull back. I want to see those buyers step in, and there we go. And to me, this is the perfect chart pattern. A low to a high to a higher low, bull stepping in. To go with that, if you're into moving averages at all, take the 50-period moving average right here. That's what this is. We're over that. In my book, that's a plus. The Trendicator has turned, you can see it red. The Trendicator has now turned green. So to me, this is what I would call the perfect trade setup. Now, just because I think it might be perfect doesn't mean it's going to actually go further up. Now, somebody there might be, what? Why are you talking about a trade that might not go up? Here's a news flash for all traders out there. Big headlines, okay? Bing, 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 big headlines. Every stock you look at that you think is good is not guaranteed to go up. This is why we have to become a master of the charts, a trader of the charts, understand the charts. And that takes a little time, it takes a little education, takes a little practice, but there are folks out there that will help, like me, like everybody in this trading room will help everybody that asks. So let's keep an eye on that super chart. Let's take a look at plug. Now, I know there's people that's in plug. Congratulations to you Hit Run Candlestick members that are. Way to go. For those that are not and wish you were, let's not be too worried about that, okay? Let's not be too worried. Let's do the same mechanics, the same routine. We're going to take that top. On this one, we're going to come down right here to these lows. Low, high, higher low. That's where I'm going to take it from. The 50% is about right there. From there, we don't particularly need this unless you just want it up there. So now what I'm simply going to do, wait for that pullback. And we've got all the tools. My favorite tool, Live Trading Alerts. What it will do is it will tell me when this is below the high and then bull stepping in. Again, it could look like something like this. I can't guarantee that's what it's going to look. Maybe let's do this one sideways. Maybe it just goes sideways. And then the bulls step in, right in there. Very, very simple. FCX is another one. Oh man, that's just about at our target that we talked about. See how this has rallied up? We've consolidated. See the 3-8 trap right in here? Boom, big time money maker yesterday for those that were in it. And today we're getting some follow through. Beautiful. Take a look at NIO. We talked about this one a couple days ago. Those that got into it, fantastic. Those that haven't, not to worry. I'll just leave that right there. Not to worry. Let it pull back a little bit. I think I'm going to open that up just a smidgen. Let that pull back a little bit, and then we can get that next entry in there. So there's lots of charts out there. They look good. Don't get sucked into the fear of missing out thing possibly today. Remember that as much as you think you might know what the Feds are going to do, you really don't. Otherwise, you'd be all in with all of grandma's money, okay? So unless you're all in with grandma's money, you really don't know what the Feds are going to do. The second thing is you have no idea how the market is going to react to that. I know that there's all kinds of whispers, there's all kinds of chatter. Don't get caught up into that. The truth is, unless you're all in with grandma's money, you don't know crap about what's going to happen with the market. So this is why I think it's best to be patient, relax, take your profits on your positions, move into cash a little bit, and let all this excitement blow over. You're not going to miss a doggone thing in the market. Somebody this morning said, hey, it might be a good day to wash my car. He was absolutely right. It's a great day to wash your car. Go wash your neighbor's car. Go wash everybody's car. Sit back. Our goal in trading is to make consistent money. It's not to jump into risk, more risk than we already are in trading. And screwing around with the Fed stuff, you're jumping into risk. All right, with that, I'll see everybody at the bottom of the hour. Let's trade smart, trade wise, and let's be cool today, okay? You guys all take care. See you at the bottom of the hour when the market opens up. Later.